Hello, investors. It's Don Vandenborg, Chief Investment Officer and Senior Portfolio Manager with Revere Asset Management. Today is Tuesday, July 27th, 4:45 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we continue to be in a bifurcated market where large caps are leading. They are very clearly in an uptrend, but mixed in with that is lagging small and mid cap stocks. As you can see over here on the trend gauge, the most important thing is how leadership is acting. And after a very strong move, starting with late Monday into Friday, we've seen day two of a pullback. No major damage done to them, though. Stocks are very clearly entitled to pull back half of moves ahead, and that's about what we're seeing. A lot of them bouncing right where they needed to around the 21-day, or in some cases the 8 EMA. So market leaders still acting fine. Short term, we're showing uptrend, but we've still got this yellow arrow pointed toward neutral. That's representing the weakness in the small and mid caps. Same thing on the medium term using the 50-day moving average. We've removed the red light because the QQQ is now back under that 6% threshold, closing the day at 5.1 and down slightly after hours on some big tech earnings. So turning that warning signal off. And long term, it's now been over a year that we've been trending above the 200-day moving average. So what happened today? As I mentioned, leaders pull back day two. We're going to take a look at some charts, and you're going to see going back to last week how we had a positive reversal with some leadership acting well on Monday despite having an overall down day in the market. Then Tuesday, Wednesday, Thursday, Friday were just very good days. Not only for the indexes, but also for growth leaders. We pulled back pretty sharply yesterday and followed through in the morning and to late morning on growth leaders today. Some of them pretty sharp pullbacks, like some of the new leaders, ASAN and DOCS, down over 10% on the day. That's tough to swallow, and that's why you have to look at your average true range on these stocks and understand how much they can reasonably give back. But a lot of the big leaders just bounced, as I said, where they needed to. We'll look at a few charts momentarily here. On the day, S&P 500 down 0.5%, well off the lows. QQQ down 1.1, also well off the lows. Same thing, Dow down 0.2. That was the leader on the day. Mid caps down 0.6, Russell 2000 down 1.1. So let's get to the charts. First, let's get to the faces of the guys running Revere. If you're interested in an active manager who gets out of the way when the market turns choppy or goes down, and while we participate in uptrends and then protect capital in choppy or downtrending markets, got a great set of rules. We'd love to explain them to you. Fully transparent. We're a fiduciary. Give us a shout. You can email or call. Dan's our America's fiduciary, as Tim likes to call him, and that's a great name for him. Very knowledgeable in all things investment related. You can email Dan@revereasset.com or his support staff, Tim, Hunter, Alex, or Don at revereasset.com. We'd love to speak to you. Or you could call 855-REAL-WEALTH. That's 855-732-5932. We'll review your portfolio, give you an assessment, and present the way we do things and what we're in now, and of course where our stops are, because we've always got an exit strategy in mind if the market turns on us. And if you didn't participate in the 4 up days last week, you'd be concerned about the give back over the last couple of days, but we understand that it's perfectly normal action, but it really needs to stop right here. Today's lows, especially if they pierced and reclaimed the 21, are critical. So this is kind of typical of what you'll see in these leading stocks. Yet now yesterday, Monday, the S&P was higher, leading stocks underperformed. So let's go back to last Monday here, where we bounced off the 50-day. 4 strong days to close the week, new high, but not in growth stocks on Monday. And now we bounced off the 8 EMA, closed in the upper quartile of the range. This is perfect action from an S&P 500 standpoint. Let's go to the NASDAQ 100, the QQQ. And you can see here, again, down but a positive reversal, close near the highs right on the 21 last Monday, then 4 straight up days to close the week. A mild higher close yesterday, but that did not represent the average growth stock. That was a couple of big tech stocks that performed that feat of magic. And now today, a rough pullback, but bottoming above the 21, closed right above the 8. And most importantly, you can see here when we're over 6% extended from the 50-day, we turn the stop light on, and we had it on starting last Friday, also yesterday, turning it off today because we're now down to 5.1%. This is a combination of the pullback and the steepness of this red line, the 50-day moving average, because these low entries over here are coming off of the 50-day average. But as we continue to trudge higher, the steepness of this will moderate some. So we'll see how that impacts the distance. But as of right now, you can see after hours, we're down 0.4% as those big cap earnings came in, and we'll take a look at those results momentarily. So there's nothing wrong with this right now after a nice 5-day move up off the bottom to give back half of it intraday, but less than half by the close. Let's look at the Dow Jones Industrial Average now. Not the NYSE comp. Let's look at the Dow Jones Industrial Average, and just fine. Again, 2 harsh days last Thursday and Friday. Last Friday and Monday. Nice recover, made a new high yesterday, bounced back, pull back today, bounced right off the 8, very slight range, a lot of strength in the Dow today. Let's look at mid caps, MDY. Here's where the trouble starts to begin. You see the 21 trending below the 50 as it has been for 5-6 weeks now, and we can't get back above the 21 and the 50 in the MDY. In addition, we've got terrible relative strength. You can see again for the 6, 7, 8 weeks. How about IWM? Same situation. Now the 21 has crossed below the 50. We can't get back above the 21. Bounced last week off of the 200-day moving average. Relative strength, again, not getting it done. That's why we're focused in the bigger cap tech names. That's what's working. That's where we've got our portfolio concentrated, but we've got reasonable tight stops. The best leading stocks travel higher along their 21-day exponential moving average, and if that breaks, we'll get out of the way. So let's take a look at some of those stocks right now. Let's start off with yesterday's earnings. Tesla, big numbers, but not the best reaction. Down 1.9, down 2% on the day. Look at this growth. Earnings 230%, sales up 98%. But as it has been doing, just going sideways on a relative basis now for over 2 months. We're going to reset this alert above today's high. That would, if we break out here above 700, that's very clearly a change in character. For right now, we're holding along the key moving averages. Some other stocks that we had our eye on related to earnings, UPS this morning or yesterday, not sure when. That's not good. So UPS comes off of our leaders list with that big gap down. And one of the best looking oil stocks was Range Resources, I believe, because they do more nat gas than oil. Very few stocks in the oil and gas U.S. exploration and production look like this, down 7% on the day after reporting earnings, good earnings. They made money and their sales increased, but again, this is still one of the best charts. The other good-looking chart is CHK, and they've got earnings in 2 weeks, but that's near new highs, although they did emerge from bankruptcy back in February, so a little bit of an asterisk on their numbers there. So how about after market today? First of all, Microsoft came out. I haven't seen any reports of disappointing numbers, but the reaction varies. Microsoft down 2.7% after hours. Then came Google, which absolutely blew out numbers, and they are up 3% after hours. Then came AMD, which was initially down, but bounced a little bit. It's up 1%. forming this cup and handle. And then finally, Apple, who just blew it out on all metrics, fantastic earnings report, and it gets rewarded with a 2% drop. So again, leaders hold the 21. We'll see if it pulls back tomorrow. We do have a position in Apple, see what happens to it as it approaches the 21, which is it's actually 3.7% down from here. So a little surprised by this reaction, but it is what it is. So let's take a look at some things that we own in-house that got jostled around today for the second day to the downside. First of all, we added to Snap yesterday as it was acting well, but those ads and a little bit of what we bought on Friday got stopped out today as we got more than 2% down below the low. So 2/3 of this we got stopped out on, still owning the initial piece, which has a 71 entry. But if it continues to show strength, we'll add it back. I just didn't want to let this get out of control as the ADMA was another 5% lower and it had pierced the pivot, found support where it needed to, and it closed decently. In the place of this, I added some Roku, which broke out on great volume, then pulled back. They've got earnings in late next week. Pulled back, bounced right off the ADMA. This is where I picked up shares today in Roku, and then added a little bit as we got made some progress. They're up mildly after hours, I think, based on Google's ad results. So here's what I want you to keep in mind with these charts. Look at what they did last week, and then what are they doing today, because the pullbacks have been somewhat harsh in some of them, but again, reasonable. So let's go through some things that we own, but also earnings tomorrow morning on two holdings. IMD, nothing wrong with this. We've got a low single digit gain in it. Didn't want to sell it all, didn't want to hold it all, so I took it down to a half position. We'll see what happens with earnings tomorrow morning on this, as well as DT. These stocks look great, strong relative strength, charts are fantastic, fundamentals are good, and again, low single digit gains on this, so I took it down to a half position, riding above the 21. We'll see what the reaction is today, but we won't get hurt too much either way. So let's take a look at some of the things that we own and how they've reacted over the last 2 days compared to last week, and I'll explain why these are really reasonable pullbacks. So here's PayPal, 6 straight up days, harsh pullback on above average volume. This one was a little worse than I wanted. Again, they've got earnings after the close tomorrow. May cut the position slightly depending on where we are. We've got a low single digit gain on this, but right now it bounced right where it needed to at the 21 day. Next up is DocuSign. And these are the 5 or 6 stocks that we've really been adding for a while. DocuSign pullback. So look at this big run, 6-7 day run. Didn't even pull back to half. This looks fantastic. Again, DocuSign continues to be one of the strongest stocks in the market. Next up is CrowdStrike. Crowd, no real relative strength over the last 4 weeks on this one, but it pulled back, had a really nice 5-day run there, just gave back part of it, bounced right off the 21. I'd be concerned if it broke below today's lows. Up next is Net. Nice relative strength over the last week and a half. Here's your 5-6 day move. A little bit of a pullback, just bounced right off the ADMA. This is my second strongest stock in the market behind DocuSign. Lulu has pulled back the last 2 days, but again, 5 up days, 2 days down, holding more than 50% out of it, undercut but reclaimed the 8 EMA. So these are some pretty tough pullbacks, but when you look at how much they were up recently over the last week, they're very reasonable. NVIDIA lagging a little bit from a relative strength standpoint and price action since it did its split, but holding on to the 21. I mentioned InMode and DT. I mentioned how we got stopped on a piece of Snap and added Roku. And 2 of the new leaders that really got slammed, luckily we weren't involved in these, but this IPO-based breakout on Docs gave back all of it and then some today, down 10.6%. And also ASAN, a new growth favorite, which has been running for a while, undercut the 21, reclaimed it to close right on it. So that's your second touch of the 21 during this. Is this a low risk entry point? It is if you use today's low as a stop, but I don't like to see big down days with volume higher than the prior couple of weeks. So might just see if it's time for this one to form a new base. So that's going to wrap it. Let's see if anything else jumps out at me that I want to discuss. I don't think so. So we're going to see, keep an eye tomorrow on how the NASDAQ 100 and the S&P 500 react to the big cap tech earnings. So mixed bag. We've got Apple down a little bit, Microsoft down a little over 2%, along with Apple. And then we've got Google up very nicely. So, but the net result is QQQ down about 0.5% right now. So we'll see how that plays out overnight and into tomorrow. That's going to wrap it. As always, I'd love to hear from you. I'm on Twitter at dvandenborre, email don@reveraasset.com, phone 855 real wealth. One thing I want to point out for people that are asset allocators is what's going on in China is really affecting emerging markets. No reason to be in emerging markets now. Relative strength has been awful for the last 2 months, and now it broke harshly below the 200-day moving average. Nothing good happens under the 200-day. The China crackdown is affecting China stocks domestically as well as the ADRs. Emerging markets, especially China, are in a void right now. So that'll wrap it. Closing up Tuesday, 7/27. This is Don Vandenborre with Just the Facts. Thanks for listening and have a great day.